Hey guys, Rafa here from the Endgame Investor. Something fun today. We have a speech from New York Fed President John Williams. From this speech, we can deduce, or we can see quite literally actually, that Williams is hanging his entire monetary policy hat on long-term inflation expectations. So there is now less of an emphasis on transitory, that bad word, because everybody knows it's stupid. And now Williams, who is probably the third in command at the Fed behind Powell and whoever the vice chair is, I forget. Clarida? Yeah, maybe they're both out because they're both in trouble for insider trading or something like that. And Williams is the next most powerful in the Fed. Now, he gave a speech at the New York Economic Club, which is a club of economics in New York or something. Here is that speech. That's John Williams, that pretty little face there, smiling at you with those big chompers. Makes you feel all warm and gooey somewhere. So we're clicking on it. Business more like usual. This speech was given on September 27th, exactly 1 month from today, which is October 27th. I must have missed this because I don't really check in at the New York Fed that often. It's boring. So first thing I noticed about the speech, because I really don't want to read these things very carefully because they're deadening. I looked for the word shortage, typed it in. Shortage. Did he say anything about shortages? No, not one time did John Williams mention anything about shortages. Business more like usual, and let's not talk about the shortages. What does he mention? He mentions inflation, the word inflation, 37 times. Now, what I found that he was emphasizing about inflation was inflation expectations. He has a whole subsection about this, inflation and inflation expectations. So he's really putting all of his rationalizational might, is that a word? I like it, into the fact that 5-year inflation expectations are still anchored. Let's see what he says. I'll start here. In fact, we are now seeing some of the pandemic-related spikes retrace, including prices for lumber.
Come on. Oh, that was a good one.
Hey, prehistoric forest.
Used vehicles and rental cars.
And I don't really care for the way your company left me in the middle of nowhere with keys to a car that isn't there. I want a car right now.
Not really. But anyway, this process of adjustment may take another year or so to complete as the pandemic-related swings in supply and demand gradually recede. They won't. As the economy gets through these highly unusual dynamics, I expect inflation to come back down to around 2% next year. And now this is the interesting part. This is how he justifies his reasoning. He says, one reason I expect inflation to moderate is that measures of underlying inflation and longer-term inflation expectations have been relatively stable during this period of otherwise volatile inflation readings. There are two important aspects of longer-term inflation expectations: their level and their sensitivity to economic conditions, in particular to inflation. You think inflation expectations are sensitive to inflation? Oh, in terms of the level of inflation expectations, survey and market-based measures of longer-term inflation expectations have reversed the declines of the past several years and are now around levels seen 7 or 8 years ago. They currently appear to be well aligned with our 2% long-run inflation goal. A second issue, here's really laying it on thick, this guy, is how well anchored inflation expectations truly are, and whether there is a risk that they could drift higher in response to the elevated rates of inflation we have been experiencing. A group of economists at the New York Fed took a closer look at recent behavior of inflation expectations from the survey of consumer expectations. In particular, they looked at longer-term inflation expectations and found that expectations of inflation 5 years in the future have barely budged over the past 2 years. Okay, I'm going to explain to you very simply why this is bullshit.
Bernard! I hate Bernard!
Inflation expectations long-term don't matter at all. First, let's look at the Fed's own measure of 1 year and 3-year inflation expectations. You see here that under normal times, you have either the 3-year inflation expectation rate is higher than the 1 year, or it's about the same, which seems to be consistent from here, 2013, all the way to here, 2020, January 2021, about 9 months into the end of the world. And now they have started to decouple. You see 1-year inflation expectations going way higher and 3-year inflation expectations not going as high. And obviously 5-year will be lower still, and you'll have more of a divergence between 1 year and 5-year. Now, what does this remind you of when short-term expectations of something rise higher than longer-term expectations of something? It's called backwardation, a topic that I cover here very frequently. If you look at an oil chart, an oil futures chart, okay? This is oil's current term structure. December 2021, oil for immediate delivery, meaning immediate oil price expectations, $84. And then January, 83.36, February, 81.89, March, 80.56, April, 79.39. This is called backwardation when spot prices are higher than futures prices and the price keeps getting lower as you go into the future. That means that inflation expectations for oil going into the future, the farther into the future you go, we can go all the way down here, 2025, 2026, 2020. How far do we get here? Oh my God, look at all these futures. 2030, 2030, 2032, 2032. I think that's the year of Demolition Man, that movie from Sylvester Stallone. That was a good year. So we go all the way down to February 2032, and the expected price, the settlement price for oil into February 2032, about 11 years from now, is 59.83. Is anybody saying that the 11-year inflation expectations for oil are negative, and that's a great sign? It means that oil prices are going to fall? No, they're saying that backwardation, when price expectations for oil now are higher than in the future, that means shortages, that means rising prices. Long-term inflation expectations don't mean a damn thing. If short-term inflation expectations are higher than longer-term inflation expectations, what you have is backwardation in inflation expectations, which means that inflation is going to go higher, meaning rising prices. I know inflation is the inflation of the money supply. I understand. I'm just using their stupid colloquialisms. And I shouldn't really. So in any futures table, for any commodity, when it's in backwardation, the expectation is rising prices because of a shortage. Also, with inflation expectations, if prices are expected to rise faster in the immediate term than they are in the long term, that means that consumer prices are in backwardation, and the expectation should be that prices will go even higher. Also, if you just divorce yourself from all these weird tables and backwardation and contango and this stuff, just forget about it for a second and think about what someone stuck in a hyperinflationary economy thinks about inflation expectations 5-10 years from now. Does he care? Does he care what prices are going to be 5 or 10 years? Now, he's not even thinking about it. He's thinking about what prices are going to be tomorrow, what prices are going to be 6 months from now. Right now, Americans and the rest of the world are thinking about what prices are going to be a year from now. But the shorter that gets, the more intense rising prices are going to become, because they become more and more and more backwardated, just like that oil chart. So it seems from John Williams' twisted, warped logic that he doesn't even understand a futures table. He doesn't understand that what he's hanging his hat on, 5-year inflation expectations, is completely irrelevant because nobody knows what prices are going to be, nor does anybody care in a hyperinflationary environment in anywhere. And these are the people running the money supply. At least he has a nice smile. Got to say that. This is Rafi of the Endgame Investor. If you want to follow me and my economic reasoning and all the other stuff that I cover, please sign up for a 2-week free trial at the Endgame Investor, and you can sign up for my Patreon, support me there. And all my patrons get exclusive content of the research I'm doing for my libertarian commentary on the Torah, portion by portion, that I'm putting together. It's fun stuff if you're into that. please support me on Patreon. There's a few other links that you can try in the description below. For now, this is Rafi, the Endgame Investor, and maybe I'll see you tomorrow if I do a video then. Have a good day.
My shoulder doesn't hurt very much, but my face does. Right here. Not here or here so much, but right here.
Nope. Ship shape.
Jesus, what happened to your face?
I knew it. See, Richard. I'll have chicken wings.